stocks, which comes up in just a bit with our research team. We have Brett Knoblauch. He's a CFA, Director of Equity Research at Cantor Fitzgerald. Thanks very much for joining us, Brett. Good morning. It's a pleasure to have you with us here on CNBC-TV18. We're in election season here. Very soon, the US also perhaps a little later in the year will be in election season, and in the thick of it, really. What's the sense? I mean, foreign investors have been continuous sellers in the Indian market, Brett. So just wanted to get some color. Is it nervousness around elections? Is it something else? Is it reallocation of some flows into China? Just let's start with that.
Yeah, I would say that might not be my complete area of expertise, but I think if you look over the last year, shares pretty much across the globe are up 30%. So I would assume it's just some profit taking. Rates have remained elevated. The whole thesis of rates coming down hasn't really played out. And you add to that, geopolitical tensions and macro uncertainty that really just haven't gone away. So it's probably a mixture of things. Returns have been good over the last year. So I'm leaning towards not reading anything too much into it more than that.
Brett, hi. So I know you track the tech landscape very closely in the US. I'm not sure how much you look at Indian technology companies as well. But just tell us exactly what's happening, because the reason I ask you this is that for us here in India, IT or tech was a big part of the market. It still is. It's a huge pillar. But, growth levels have really tapered off, and we're not seeing evidence of a pickup even in the quarterly earnings season that's underway here. So, what do you think is the cycle looking like? Where are we in that cycle when you talk about Indian IT?
Again, I would say my focus is probably a bit more focused on US small mid-cap tech, but I'm sure there's a lot of similarities between the two. I think, we came from an environment with zero interest rates where money was free. A lot of companies use that to aggressively hire. And at the time, this is when shareholders were rewarding companies with higher valuations based on growth. Then fast forward to rising interest rates, and everything had a bit of a cascading effect, if you will. Once macro turned, budgets became more scrutinized, deal cycles have lengthened, and money wasn't free. You saw, I think, a lot of sentiment change in the market where investors weren't really prioritizing growth as much as they were profitability. And I'll caveat that by, if you look at just the average software multiple pre-pandemic of the 120 software companies that we track in the US, you're looking at somewhere close to 9.5 times on an EV to sales basis. Right now, we're just under 6.5 times. So we're down 35% compared to pre-pandemic levels. So from a risk reward perspective across tech, I think valuations are very attractive, especially at the smaller end of the market. Like, I think big tech has done very well, and you have seen that. But the smaller end of the market, you haven't really seen the multiples re-rate as the big tech companies have. Now, those companies are more pressured. Revenue growth has come down, but valuations have come down quite considerably. And if you take that into hand with, rates hopefully coming down over the next year, you could see how the risk reward for software companies, which are looking to grow 15% this year, 13% the year after that, plus you get the multiple expansion, how it could result in, good returns.
Hi, Brett. Good morning, and good to see you win. Brett, for the Indian markets, we've got the next big trigger is the election. So if you could comment on that, for the global markets, the US elections is going to be the bigger trigger later on in the year. So quick comment on that. And I recall, you all had written that note on Adani Enterprises as well. You have a fairly bullish. Any stock-specific, action that you're looking at here in India? Any view on any of the listed stocks here in the Indian markets?
Yeah, elections are important. I think it's more a clearing risk to kind of get it over with. The U.S. is probably a bit more volatile. Both parties come with their own pluses and minuses, I would say. Whether it could be Trump kind of looking at raising taxes on China and what that could mean for inflation, the deficit inflation, and the trickle-down effects on that. So yeah, it's going to be an interesting couple of months when it comes to election. I think regarding Adani, we actually just had them on the road in New York, Miami, and Toronto last week. So that's still the only company I cover in India, and I would say demand from a U.S. investor perspective was off the chart. I would say the three main focal points that investors were really asking about was their green hydrogen business, which is a bit far out, like 2027 is when they're not going to really begin to start monetizing that, or when their facility becomes operational. But hearing them speak about just the economics of it and how cost competitive it is with alternate forms of energy, you get really excited about it. The fact that they're thinking about or potentially being able to generate green hydrogen at $2 a kilogram, or $10 a million BTU, that's cheaper than what we pay for natural gas here in the U.S. Obviously, they're not going to sell green hydrogen directly; it'll be their derivatives, but it just gives you the sense of things. And then the airports business, we had their CFO of airports over, and they're looking to invest a lot of money in the city side parts of the airports. And I believe there's another 11 and 14 airports coming up for auction over the coming year. And I would guess that they're going to be actively involved in bidding for that. But the non-air side of that business is really interesting. There's might be 100 million passengers coming to the airports right now. Once Navi Mumbai comes on board at the end of this year, that capacity is almost going to double. Non-air passengers are going to be 500-600 million coming to their ecosystem, spending $5 a day at 40% margin. So you can see how that airport business could easily get to $1 billion of EBITDA.
Right.
So yeah, we're still very bullish on Adani Enterprises. We think it's the flagship investment vehicle is just a great way to get exposure to a lot of different aspects of India, which I would say we're generally very bullish on India.
Got it. Brett, we'll leave it there. Good conversation as always. Thank you very much, and look forward to more initiations here in India and other groups, etc. as well. And we'd love to have you back. Thanks very much, Brett, with some perspective on what he's making of India, very bullish generally, and of course on the Adani Enterprises name as well, talking about the kind of exposure it gives to various sort of facets of the economy here. We'll take a quick commercial break here. Our list of top stocks to watch out for with the research team lined up next. Stay with us.